Hello, welcome to another live stream of Master Investor. My name is Jose. I'm the founder of the company and brand here, Master Investor. If you're new to our community, ensure you subscribe, turn on the notifications so that you know when we go live or upload a valuable video like this one that will change your finances forever, as long as we apply the information into our lives, right? We have to have an investment plan that is actionable, that we can take steps every day and we can see results. And it's all about learning how to take control over our finances. And we can only do that through financial education, okay? Today, I have two articles, but we're going to do them separately. So I'm going to do the short live stream because yesterday we talked about this, how to do due diligence and calculate cash on cash return on investment. But the live stream, for some reason, was too long and it's not recorded on YouTube. So I'm just going to do it again so it stays here for the ones that haven't watched it, all right? So if you have any questions, let me know in the comment section. Look at all the links in the description. Those are tools, resources, our digital ebooks, products, courses that we have available for our community to take advantage of whenever you're ready to start building the asset column and take your finances to the next level. Whatever you are financially, we have partners that are making millions of dollars per year. We have people that are new, starting out their first business, their first digital asset. So welcome to a community where we stay authentic with money, business, and investing. We are the global brand of money, business, and investing, and we're here to give you the good and bad news of money. So everything that we talk about here is to build our asset column successfully. We must master both and having them as part of our strategy for real estate investments, doing due diligence and calculate cash on cash return on investment. Remember that due diligence are the second most important words in the business language. The first ones are cash flow. And then we need to calculate cash on cash return on investment because we need to have that number before we even invest in the asset. That's going to determine whether that is a sound asset or a fake asset or liability, right? The cash on cash return on investment is based on facts. So we want to always measure our return on investment with facts. Okay, today's summary is finding an investment cash on cash return doesn't have to be tough. Don't base our investing decisions solely on financial models. Performing thorough research is essential for profitable investing. Many individuals believe that investing in real estate is risky and challenging. Of fact, there are entire industries that profit. I just want to make sure we were recording and we were live. Okay. Profit of the complications of seemingly basic subjects. We, a master investor, have learned from our mentors to keep things as straightforward as possible. We have a straightforward recipe for success in real estate. Two important questions to ask when investing in real estate. Number one, what is this real estate investment's cash on cash return? Number two, have we investigated real estate property thoroughly? These were the two sides of the coin that, in our opinion, were necessary to proceed with any business. The majority of individuals concentrate on cash return, yet financial models are merely snapshots of current knowledge. If we do not conduct due diligence in investment properties, cash flow yields a strong return on our capital invested, we run the danger of discovering a hidden expense that would demolish our real world financial models. We don't have the whole story as an investor. To get the whole picture and make any required adjustments to our financial assumptions, we must do our due diligence. And we have a list by the end of this video. If you stay, you watch it, you'll have a list that you can use, okay? We use that all the time in our investments and real estate. Investments in real estate, okay? You're going to need that list to do your due diligence. So if you want to start building your asset column and you're thinking about buying a commercial real estate property in the future with the bank's money, raising capital, and so forth, using the tools and everything that we're showing you how to do here, then you're going to need that list. So that's something that our mentors are using, we're all using to create passive income because we're acquiring the real assets that are producing that type of income, because we can tell even before we buy it whether it's a real or a fake asset. How to figure out the real estate cash on cash return with these. First things first, we should never purchase an investment property if it doesn't generate cash flow or offer a profit on our investment. Although it may seem apparent, some investors use complex formulas like this to purchase investment real estate. Number one, rate of return internally. This is a return on investment calculated under the assumption that all passive or cash flow income is reinvested right away, giving us a return on our initial investment plus interest. Number two, present value a net and projected discounted rate for the future value of money is taken into consideration here. It computes a discounted rate of return by comparing the current investment value to the future cash flow value. Every formula has advantages and disadvantages, and none is as simple as cash on cash return. They rely on guesses, and depending on how well the study is done, those assumptions can produce quite different valuations. They are opinions, they're not facts. We want to measure a return on investment with facts, always. According to an old proverb, garbage in, garbage out. Even if these factors are crucial for a successful investment, the most crucial factor is just knowing that our initial investment would yield a profit through cash flow. The simplicity of calculating cash on cash return is its strongest feature. To calculate cash on cash returns, divide down payment by positive net cash flow. Here's an illustration using a few sample numbers. Assume we spend $500,000 on an apartment building. We obtain a mortgage for the remaining $400,000 after making a $100,000 down payment. Now, the $100,000 payment doesn't have to be made with our capital. If we had let's say $100,000 cash and a debit card, we could raise another $100,000 through maybe a credit card, a credit line. We go to the bank and we tell them, hey, we would like to have a credit line. And they're going to say that we have $100,000+ cash. They're going to match that with whatever we have. That now we have $200,000. So we can utilize our money to raise more capital, and then we can use different credit cards too. Maybe we have 5 different credit cards that each one has $25,000 each, and we can invest that as long as the numbers crunches correctly at the end of the expenses. We can pay everything with the revenue of the business, of the cash flow that is coming in. The net cash flow of that business right now can cover all the expenses, the debt service, the interest of each credit card, etc. It must do that and also put positive cash flow in our pockets. Okay, so let's say we obtain that $500,000 apartment building. We put the $100,000 down and we're raising $400,000, and maybe we raise the $100,000, depend on each individual. Following the payment of all bills, our monthly cash flow, let's say, is $2,000. If we were to divide $100,000 by 24,000, 2,000 times 12 months, right? Our cash on cash return will be 24%. A 24% return could be advantageous or disadvantageous depending on our circumstances. That is up to us and our investors to decide. However, knowing our expected rate of return is a straightforward method to determine whether or not to proceed fast. The value of doing our research before buying a property. After deciding whether a real estate investment offers a sufficient cash on cash return, we must use the due diligence to ensure we receive the value for our money. Investigating every nook and corner of a possible investment is known as due diligence. This is an action that requires rolling up our sleeves. Any purchase agreement should include a condition requiring the seller to supply all required materials and access within a specific time frame, as well as a due diligence period. This entails rewinding the financials, conducting inspections, evaluating the rent roll, and more. Among the most crucial terms in the field of financial literacy are due diligence. A knowledgeable investor learns the other side of the story during the due diligence process, which entails carefully examining a possible investment to verify all relevant information. We frequently find hidden costs during a due diligence stage, which means we will have to modify our financial models to account for cash on cash return. This implies that in order to make our models function, we might return to the vendor and renegotiate the purchase price. If we ignore it, the transaction could soon turn from a profitable one to a liability one, to something that has negative cash flow. Remember, we have to account for the new expenses that we're adding to the business, and that bottom line that business has right now should with ease cover those expenses that we're adding into that, because we're coming in with a new mortgage. Maybe we have $100,000 on credit card as a down payment, so we're not even using any of our money, even though we have the money. So something that we always say here at Master Investors, that we have to be creative enough to use other people's money. OPM, other people's money means the bank's money, credit cards, right? Anything that doesn't come from our bank account. So it will have to come from the bank, from a third party. It could be a family, it could be a friend, it could be a private investor, etc. And we can raise capital, because that's the job number one of an entrepreneur. We have to become a master at that the right way. Actually, when we put the deal together, money finds us. And if money doesn't find us, we'll find money. And we know how to ask for money because we have the right tools, the right lingo. We have a deal that is attractive. So they're betting on the deal. It's a big difference. We're investing on an asset that produces passive income. This entails reviewing the financials, conducting inspections, evaluating the rent roll, and more. Among the most crucial terms in financial literacy are diligence and knowledgeable investor learns the other side. Okay, so I said that we frequently find hiding. Okay, when we ask any investor how we identify profitable ventures, the answer is virtually universal, that we understand the importance of the due diligence process. The faster we can complete our due diligence on an investment, the more likely it is that we will find the safest investments with the highest potential for positive cash flow and capital gains income, whichever income the asset will generate for us. Always use the cash flow triangle to ensure we are building or acquiring a sound investment operation. As you can see, we have the cash flow triangle right here. It has 8 integrities: mission, team, leadership, cash flow, communication, systems, legal, and product. They all are important equally, and they must be established in order for a business to become a brand. And if we're going to acquire a business, then we need to match that business and run it through the cash flow triangle to ensure that if there's any of those integrities missing, can we add that integrity right away? Can improve the bottom line and so forth? We need to make sure that it's a true brand that we're buying, not just an asset. That could be a commodity tomorrow, something that can be replaced. We need to make sure that we are acquiring real assets that we control with our companies that ultimately can generate passive income and capital gains incomes for a long time. Some assets, although will only bring us maybe from point A to point B, and it's not going to be an asset that's going to be for us forever. But we're going to know what type of asset it is before we even get in, because we have done our due diligence. A Master Investor's thorough research real estate checklist. We always go through this checklist. Even our mentors, of course, make use of this list too. It is extremely comprehensive and has things like phase 1 environmental audit that were not around a long time ago. As we go through this list, find experts in any areas we have concerns about and bring them in to assess the deal together with reputable lawyers and accountants that have ethics and business education, financial education, that have the wealthy context. Not all accountants, not all lawyers, not all bookkeepers are cater for the wealthy. They have the wrong context. They operate with the poor mindset instead of the wealthy mindset. So we need to find the ones that have the wealthy context. Otherwise, they're going to be looking south and we're going to be looking north, and they're going to tell us not to make money because we'll have to pay more taxes. And actually, it's the very opposite when we're doing it with the wealthy context. We make more money through investing. We pay less in taxes because this country is founded, and the idea and the foundation of paying the least of taxes as possible, because we are improving the economy. We're creating jobs, we're creating assets, we're building the infrastructure of this country over and over again. So the government partners with us because we're doing exactly what they want us to do: invest in housing, oil, energy, food, etc. Things that actually help the economy grow. So we live in a capitalist system, and we must become a capitalist because that's the highest level of an investor, is to be a capitalist. Number 1, there are 34 items on this list. Okay, if you want to have this, go to our website, sign up for our newsletter. It's free, and then just use it. Okay. Number 1, rent roster current as of the pay to date. Number 2, enumeration of security deposits. Number 3, details of mortgage payments. Number 4, list of personal possessions. Number 5, plans for floors. Number 6, policy of insurance agent. Number 7, on keep and service contract. Number 8, information about tenants, leases, applications, ledger cards, and smoke detector forms. Number 9, list of suppliers and utilities providers together with accounting numbers. Number 10, an explanation of the structural changes made to the property. Number 11, engineering documentation and surveys. Number 12, commission contracts. Number 13, listing or rental contracts. Number 14, agreements for easements. Number 15, development plans comprise as built, architectural, structural, mechanical, electrical, and civil drawings, as well as plans and specifications. Number 16, government authorizations or zoning regulations influencing the property's growth. Number 17, contracts for management. Number 18, property tax statements and tax bills. Number 19, bills for utilities. Number 20, journals of cash receipts and disbursements related to the property. Number 21, records of capital expenditure, disbursements for the last 5 years that are related to the property. Number 22, statements of income and expenses related to the property for the 2 years before the deadline for submission. Number 23, the property's financial records and estate and federal tax returns. Number 24, general adequate termite examination in terms of both form and substance for the customer. Number 25, any other records and papers that the seller has or is in charge of and that are essential to the ownership, use, or upkeep of the property. Number 26, market research or local studios. Number 27, building budget or actuals. Number 28, surveys or tenant profiles. Number 29, files for work orders. Number 30, 2 years worth of bank statements displaying the property's operating account. 31, occupancy certificate. We need to make sure, right? The occupancy, make sure that it's occupied or what is the occupancy during the entire year. Number 32, abstract title. Number 33, copies of all remaining warranties and guarantees. Number 34, environmental audit phase 1 if applicable. If we are buying an apartment building, make sure to physically walk around and inspect the property, including each unit, in addition to making sure everything on the list is secure. Make a note of all the damages, then utilize that list to bargain for a reasonable amount. Ultimately, the secret to real estate success is simple. Do research, right, through our due diligence, plus cash on cash return. If we do those correctly, we will be in excellent financial health. The wealthy class on the planet do not work for earned income. What is our investment plan? We must find out quickly. The question is, how can we acquire assets without our own money? By investing in our financial education to master the job number 1 of a wealthy entrepreneur, which is to raise capital from direct sales from the front end of the business or investments operations, right? It needs to bring in sales through sales funnels on autopilot, right? We have systems that are doing the selling and telling for us. We have an ad that is bringing in 10, 20 sales a day. We have many other ads that are bringing more leads, right? And we can have different products, different niches that we're filling in needs and solving it with a problem, right? But the product is not the most important thing. Remember the 8 integrities. One of them is the product, but it's not the most important thing. So if you just focus on the product, then the business is not going to do well. It's going to fail eventually. You need to have the 8 integrities, okay, of the cash flow triangle. And raise capital also from the back end, from private lenders, banks, investors, family members, and other ways, because the business is sound. So other people are attractive to the business or investment operation due to the fact that money works successfully in that business and multiplies. You can invest money and it will bring money back and it will continue to bring more money back. The wealthy entrepreneur and inside investor creates something out of nothing. A business and investment should be built to raise capital from the front end through direct sales via systems like we mentioned, and also from the back end, and doing sales via system that is called marketing. The phrase that it takes money to make money is not true, because there are many people with money and savings accounts in the bank right now, and they are not wealthy. They don't even know how to put that money to work. If that was true, then they will make money with that money. And they're losing money by having it in a savings account because inflation, number one, taxes on savings, and number three, it hinders their entrepreneurial spirit because you don't learn anything by saving money. Putting it in the bank account, anybody can do that. It doesn't require any level of financial education or intelligence. Understanding the 90-10 wealth revelation. 90% of the world's wealth is held by the 10% of its inhabitants. The only way to be part of the 10% is by becoming a business owner, an inside investor who thrives on the right side of the cash flow circle. Remember, 4 players in the money game: employee, self-employed, business owner, inside investor. Here at Master Investor, we develop and we work to build our skills on the right side of the cash flow circle, because that's where freedom is achieved, total freedom. That is where wealth is built, okay? And that's where we make money our slave. On the left side, you're exchanging time for money. The individual has to show up to make the money, and usually if he wants or she wants more money, has to either put in more hours or get a higher paying job or get someone to pay them more for their time. And then you can see it there in more detail. On the left side, the population, like majority of people, that's where they stay their entire life. And if we focus correctly, then we can actually tap into the unlimited wealth that exists in this world. Okay, there's 2 problems when it comes to money: lack of money and then too much money. We want to have the second problem, too much money, because we have financial education, so we can raise capital. And then when we have capital, we can put that to work to make more money. And then we can put other people's money to work as well. The bank's money, right? We're bringing assets to them because they cannot do it themselves. This is a capitalist country, like I mentioned earlier, meaning that is a country where people like us have to bring in the deals to the banks for a profit. And this is the best system that exists to become wealthy. So use inflation as our friend to become wealthy. Don't complain about inflation. If you're a saver, then you're complaining about inflation and you just don't understand how today's economy works. So get educated. Check out the links in the description. Get our digital courses. We have 3 right now: how to build cash flow with the internet, turn passive income on, the 10-year rules of money, how to invest in crypto to build wealth, understanding Bitcoin and blockchain. You can find those ebooks on Amazon, on Kindle. However, when you go to our website, you have the ebooks plus a digital course that comes with that ebook. And it's a vivid course that will grow in value because we're adding more assets in it. And whatever asset we add in that digital course, after you get in, you will always access any additional assets at no additional cost for life. So it's just a great investment in your financial education. It's going to grow up in value because we're adding exclusive interviews, tools, resources, artificial intelligence to ultimately emphasize more on the topic of that volume. And we're going to update whatever we need to in order to keep that fresh, in order to keep that information relevant to what's going on, and to ultimately help us create more freedom by having true wealth. Okay. Let me know if you enjoyed today's talk. I'm about to jump on another live stream right now. Remember what I said earlier? I did this yesterday, but I wanted to record it because we went over 12 hours on our last live stream, and for some reason it's not recorded on YouTube. So I just went ahead and wanted to knock this out of the way so those people that haven't watched it, they have access to this amazing talk that we just cover on how to do due diligence and calculate cash on cash return on investment. I'll talk to you on the next live stream. Let me know if you have any questions below. And the next topic is going to be, let me see if I have it right here. I think I do. It's this one right here. Fake assets versus cash flowing assets. Okay. That's going to be on the next live stream. and we're going to be doing a podcast as well. So just to encourage you to start utilizing the tools that we have, because maybe you have a topic that you can share with the world, and it wouldn't take you more than 10 minutes. I mean, however long you want to do them, but as long as you're starting to empower yourself, because we're investing in things that are under our control 100%. No one can take it away from us. We're building assets, and having a podcast can turn into an asset because of ad revenue, sponsorships, collaborations. Then you also have like affiliate partners, right? You can promote products, and you can put calls of actions embedded in those audios, right? And we can create an audience now that is attractive to those items that we're promoting, right? So whatever passions you have, figure out whether there's a product that you can serve the community with, and how big can you scale that. Can you make more than $2,700 a day on it? Because if we do that, then we're over $1 million a day. I mean, a year for cash flow. If we do 2,700 plus dollars per day on positive cash flow, and that sometimes requires 2 items, 3, 4 items, depending on each item's commission, whatever we're getting for each sale. There are high ticket items and there are low ticket items online that you can find. So the same energy that takes to sell through marketing using systems a low ticket item is the same energy that will take to sell a higher ticket item, which will cost more money but will pay us more. Okay, so just choose your items wisely, whatever we're selling. Look at the company, review it. Let's see if it's a true brand. Run it through the cash flow triangle, through the A integrities, because we're going to be partnered up with them. And we need to make sure that the real company, they're also here to stay and they can fulfill the sales of the leads that we're sending them, right? And so we're going to create a list of individuals every day that are interested in buying from us. And we want to do that on autopilot. The most important thing is that we are using systems. We're not doing a one-on-one sale, because that's just sales without systems. We're going to implement systems because that is marketing, smart marketing. 3 things that we must have in order to create wealth online. Number 1, a capture page to capture new emails and names of potential leads, and then we can put them in different lists. And then let's say that landing page or capture page is for XYZ product, and then we're bringing in leads through that. That is connected to the second step, which is an email autoresponder. There are many softwares that offer an email autoresponder. Usually it's a marketing suite inside where you can create even the capture page from inside the email autoresponder. So look for an email autoresponder, create a capture page, connect that capture page with one of the lists that you create inside of the email autoresponder. And then the third step is targeted traffic. And we do that through channels like Facebook marketing platform that they have, ads. We can run campaigns on Facebook pages and any type of niche that we have. We can run a campaign on there and reach billions of people. Okay, we can run campaigns on any platform, just about any platform, social media platform, including X, formerly known as Twitter, Pinterest. We got TikTok, right? And we have LinkedIn. We have so many different social media platforms where we can find the right group of people that wants what we have to offer, right? They must actually be ready to buy, because there are 2 types of people on the internet. Number 1, people that are looking for information. Number 2, people that are looking to buy the product. So we need to put that message in front of them so easily that they can grab, buy, and repeat. And that is called marketing, right? That is what marketing is, finding a group of people, having a system of systems and putting that in front of them. And we're going to show you exactly how to do that. So start building the asset column. 3 steps: get a capture page. Number 2, get an email autoresponder. Number 3, have targeted traffic. And you start receiving direct sales, which will turn into passive income. And in order to make more than $1 million a year on cash flow, on positive cash flow, that means that we must make over $2,750 per day on positive cash flow. After all expenses are paid, that's our profit. If we do that consistently for a year, we create $1 million on positive cash flow, which many people never get to accomplish because they don't have the right information. And the ones that do have the right information, maybe that's not their desire. And we talk about it all the time. Everybody's wealth number is different. If you don't want to make $1 million, then that's great. Don't do that. Make whatever you want to make to fulfill the lifestyle that you want. The whole point is that we are masters of money. We tell money what to do. We don't let money tell us what to do. We tell money, you go work hard and you're going to bring me more money. And I'm going to utilize that to multiply and create products and solutions to empower the world, to ultimately help humans, right? Lives become better, because when we do that, our lives become better automatically. The more generous we are, the wealthier we become. So practice generosity, because it's about solving people's problems. I'll talk to you on the next live stream. If you have any questions, any feedback, please drop it below. And if you learned something from this video, let me know. Okay? If you need any help, reach out. Don't be shy. I'll see you on the next live stream, bringing the good and bad news of money, the business principles that work in all economies. And yeah, I'll be going live in the next 20 minutes or so, okay?